Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is September 11th, 2018, and I'm going to take a look at Australian dollar. And I want to point out something, maybe I haven't mentioned this before, but I always mention an ETF. In this case, it's CROC, C-R-O-C for the Australian dollar, but that's a short ETF, and that's because it's going to be corresponding to some of the things that are going on with the actual deep dive material here. So sometimes you'll see it as a positive, or sometimes you'll see it as an inverse ETF. If there isn't an inverse ETF, but yet the signals are still kind of looking more negative, it's still going to show the positive. But where we're able, we're going to be posting and showing an ETF that would be in the directional play of what we're talking about here. So I just want to point that out. So you'll see these ETFs change slowly over time. So there's not really a lot that's going on with a lot of markets. So this is part of the reason I'm just talking about Australian dollar, because it's been in a pretty strong bearish trend. So here's short, intermediate, and long term all point to the downside. But there's a couple of things that I want to point out, and then you'll get a feel for where I'm going here. So the technical rating is flat, and that's usually something that tells us that when you have pretty strong trends across the board and you have a flat technical rating, that's something that's telling us that something is amiss, and you probably want to take a closer look at the market. Now the seasonal accuracy is still negative, which corresponds obviously with the trends themselves, but there's going to be a little bit of a bounce and then another retracement to the downside. So we're going to spend a little time looking at the seasonal accuracy. To give you an idea as to where we stand with the systems, just so you know, we have a system, a daily system that just went long today, and that is now helping to hedge our short position. So we've got 2 short, 1 long, and the long obviously just triggered here today, so we'll start to get some more information. But this is a pattern-based system, and pattern-based systems, for the most part, at least the way we use them, are there to offset and hedge risk related to a lot of the trend-based systems. So I'll go into that in a little more detail in another presentation, like a signal insight. But just understand the reason that we post what the trading style is, so that you get a feel for what's actually taking place in relationship to some of the other trade position we actually have out there. So let's take a look at the Australian dollar, and you'll see obviously a strong bearish trend, lower lows, lower highs, and we have this on daily bars. You don't really see anything on the daily bar basis as far as support to the market. So I'm just going to switch over here to the weekly, and there is very strong support to the market right over through here, 29 and a 29 on weekly bars, which is what these represent. That's pretty strong. So we're basically in the zone of that support. So we are expecting perhaps a little bit of a bounce here, but I don't know how long it's going to last. So as far as the bounce goes, I just want to show this. You can see lower lows, lower low, lower lows, and in this particular case we've got slightly higher lows here in the elastic level, and what that's telling us is that there's it's not a perfect bullish divergence, but it's telling us that the market is not sliding as fast in the indicator as it is in the market, and the indicator leads the market as far as the pricing action. So what we're going to be looking for is perhaps a little stability here, maybe a little bit of a rise, but how long is that going to last? Well, a lot of it is predicated on that support level that we just talked about. But if we flip back to the website, and what I'm going to do is pull up a projection, a seasonal projection for the market. So here we are in this phase right through here. Once we get into next week or so, the 17th, the 18th, and 19th, that zone, that area, then we would expect perhaps another little bit of a sell-off. So I'm expecting a small bounce here, just because the market itself hasn't really been selling off as quickly as it had been, and it looks like there's a little bit of stability. But I'm cautioning here whether or not it's really going to have enough push here, and if the trend to the downside could actually continue. And this is pure speculation based upon the seasonal tendencies, but I would have you watch your positions. Obviously, I noted that we're starting to hedge part of our positions with the systems, and so this hedging process usually starts to occur when the market is kind of run out of energy a little bit. It's going to stabilize hopefully a little bit, and then based upon whether or not it's able to really hold its feet and really start to head higher, that will dictate whether or not we remain in the shorts, maybe even add some more longs and truly go hedge this position. But right now we've got 2 short, 1 long, and it puts us in a position in more of a protective mode than anything else, because we've been short for quite some time, haven't been able to take advantage of this weekly system since late February. So that will at least give you an idea from the projection side where we think the market's going to go. A little bit of stability. About a week or so, we would expect to see some type of weakness to the market based on the seasonals. So we'll see how things kind of play out. The other thing, just in closing here, I haven't added this to the menu system, but I get a lot of questions on other markets. I used to run a CTA and we used to trade a lot of different markets. And so what I put together was an update to my, what I term as my periodic market table. So it's like the elements for the periodic table. But in this case, we are exchanging the elements for different markets. So here's coffee and the rest of the softs, and we've got the grains here, the metals, interest rates, different types of currencies, the energies, domestic equity markets, foreign equity markets, and so forth. So I'll add more information out there. It might be hard to read some of the names here on this particular video, but just realize that don't be a one-trick pony. Don't just simply trade one market. The reason that I do these deep dives is so that I can address a new market every day as best as I possibly can, and give you an idea as to what can happen should you actually trade the Australian dollar. And I pointed out in this particular presentation that you can do it obviously with ETFs. So that being the case, whether you're doing it in futures or in the ETFs, consider diversifying your portfolio. Don't be a one-trick pony trading a single market, single system, single time frame. Diversify. And so the object of this periodic market table is to really kind of show that there's a lot of markets that are actually out there, some more liquid than others obviously, but there's plenty of markets that one could trade, and we're going to start to introduce more and more information about some of these markets as just putting us in a position where we can help you to diversify your trading portfolio. So that's the upshot of what in this particular case, the periodic market table is all about. I'll add that someplace on the menu system here shortly when it's completed. And with that, caution on your Australian dollar positions, and we'll take a look at another market tomorrow. Thanks so much. Bye-bye.